So, good morning, all of you. We have the start of the week, and today we are going to take today's briefing. We are going to start within a minute, and today's briefing will be more special because today I'm going to decode one of the most important data, which is the commitment of trade report of data. You have heard lot of time that 95% of people lose their money, especially into gold, but nobody tells that what is the exact reason. And the exact reason is that when we are taking trades as a retail trader, we don't know against whom we are taking these trades. So we need to understand that thing. So I'm going to decade and I'm going to give you my short system, which is I call the COT Stress Index, right? It will help you in digesting the COT data, right? And it's very simple. It's no math required. It will give you a rating, and according to that rating, you have to decide that in which direction you need to take the trades. But before discussing this COT Stress Index for today, and I'm taking the today's live data, right? So, but prior to that, we have a look on the economic calendar, that what are the upcoming data events and all we have. Once this is done, then we'll discuss this thing, right? And soon I'm going to, because this is a very important and very confidential thing. Only the existing clients will have this access, right? You don't find any news article or any article or a video in such a detail through which you will have an idea that how to analyze the commitment of trade reports of data, right? And what you exactly have to do if you are an intraday trader, right? So we'll discuss that. So without wasting time, let's first discuss the economic events for today. So for that, just give me a minute. Okay. So let me share you the economic calendar for today. And now you guys have access to my screen, right? And everything is visible, right? So now let's come on to the 9th of Feb. So this is the 9th of Feb, right? So just have a quick sneak peek in today's morning data. So for Japan, we have the current account data. So this is important for me because it's tell me that what is the balance of trade, and this is one of the important factor which central banks keeps in their mind when they are discovering their exchange prices, right? Every day if you're trading into currency, there are two times when the central banks issue their reference rate, right? So suppose if you're trading into USD JPY and JPY have declared their interest rate or the reference rate in the morning, that whatever contracts are being traded after this, their reference price, the bank will use this price for all the currencies. Every central bank do. If your currency is trading above it, that means your currency is overvalued and high probability that it will take a correction to its reference rate. If prices are trading below the reference rate, high probability prices will come at the reference rate, right? So you have to have an focus. And after deciding the reference rate, if you see the candle is continuously moving upwards and the strength or the range of that candle is very strong, that means the reference rate is going to be updated, right, next day, which is higher than the previous one. That means the trend is seriously strong. This is one factor, right, which you have to keep. So if you're trading USD JPY, you need to visit the Bank of Japan website, and over there you'll find the exchange rate, that what are the exchange rate they have decided, right? Like if I talk about Bank of Canada, every evening at 5 p.m. they declare their reference rates, right? 4:20 p.m. I think it's for the US Fed. So you need to visit their website. And same is the case with Bank of England and Euro. So you need to have in focus on this. And this is the data which will have an impact, because we have seen that almost 7,288 billions of yuan current account, which is in positive figure. That means surplus is there. Lot of exports are being happening. So JPY will get strength because of this data, and the market have already done this, right? So we'll match this, that whether the market have reacted the same way the data is telling us. Then if I talk about the overtime pay, so for Japan it is very necessary. Previously it was 1.2%, right now it's 0.9%. That means it will tell us that what is the productivity of that economy, right? And why this is important: if overtime is increasing, lot of production will be there. If production is there, that means that country is planning for the upcoming demand. So whatever goods they make, like Honda engines they make, they have Nissan, right? They have IT companies, and majority of their exports is towards the US. So if people are doing overtime, so there will be an increase, right? And if they are earning more, then there will be more disposable income with them. Retail sales data, everything will be very good, but yes, chances of inflation will be there. And if there is inflation, so bank either is going to increase the interest rate, and already they have done that. Same is the case with Japan. They are famous for their negative interest rate, but for a very longer period of time, right now they are in positive figures. So they are going to keep that rate as it is. So this is the data which is telling us, right? Then for the Australia, we have the household spending. That means how much the household spending are. So it's the December data, right? But let's have a look that what this data is telling us, that previously it was 1%, right now it is negative 0.4%, right? In the month of December. It is an indication that people are not spending. Instead, if they are not spending because their economy is performing very good, high chances that they are investing or saving their money. It's a good sign if you're trading into the Australian indices or into the bond market, right? Previously it was 6% on a year on basis, right now it is 5%. That means spending is decreasing. So this is not a very good sign if you are trading currencies, right? Because we want some kind of news which will tell us that yes, Australian bank will cut or increase their interest rate, and this is telling me that everything is very calm, right? Everything is under control, no inflation. That is the reason household spending is going down, right? But we need to find more data that what is the reason. Is there a chance that people have not that much money? So in the upcoming data we'll have that. We have money supply data, foreign exchange reserve data for the Australia, so we'll see that. Then moving ahead, 6 month bill auction is also very important, right? And over here you can see that on a shorter term period, if any bank is increasing their interest on the bond, it is an indication that for a shorter period of time that economy is facing turbulence and they require more money, and that is the reason they are offering more interest rates. Second reason, that they are offering bonds but nobody is investing into their bonds, right? And the reason is that because they are not getting that yield, so to offer a better yield, they are increasing their interest rate so that foreign fundings or foreign direct investments will come into their economy. So this is one reason, right? And just for your knowledge sake, let me be very clear that Bank of Japan is facing this issue. Right now, nobody is investing. That means nobody means very few people are investing into their bond market and they are not getting foreign investment which they require right now. So this is one data. Moving ahead, then we have the T-bill auctions, right, for the South Africa. And why I have included South Africa into this, because it is one of the largest producer of gold, right? So those who deal with the Australian companies, especially the miners of gold, right, they tend to hedge their trade deals in terms of T-bills, right? Which is called the money bill auction. So their data is also going to impact, right? So whether the yields are increasing or decreasing, right? And we need to see the auctions also, that how much people have participated in these auctions and how much fund they have generated through this. So this will tell us this. Then at the 5:30 we have the ECB member Len speech. So this speech is going to impact because a lot of things are happening in the euro, and right now their economy is slowly gradually performing very good, right? They having very good trade deals with all apart from the tariffs. So we need to see, we'll get lot of hints from this speech. And don't worry, whatever comes into this speech, you'll find all the updates into our official Telegram channel of BMN Capital Insights, right, will update that what the Len have said into this speech and what they are uh, hinting us, right? Then moving ahead towards the US session. So although we don't have any strong data, but yes, we have the Bank of Canada market participant survey. So this is a sentimental data. This will have an impact on the Canadian pairs. Then the most important event for today is the ACB President Christian Lagarde speech. So we have to focus on this speech. Then at the 9:30 we have the consumer inflation expectation data. This is also a sentimental data. Previous reading is 3.4%, right? And forecast is also for the 3.4%. And this is the trend. If you can see, it is rising, right? And if it is rising, that means in the upcoming FOMC meeting that is going to be held in March, right? In February, they don't have any meeting, right? Because we have very short span of time, only 22 days are there in Feb. So they will have their FOMC meeting in the March. And if any, this data will give us hindsight that what will be the probability of an interest rate cut. If there is an interest rate cut by 25 basis point, it is a good news for gold. Okay. And same as the case we have discussed for the Japan, same is the case with this 3-month bill auction, 6-month bill auctions, right? And these are the interest rates. So we need to see whether they are increasing the interest rates on bonds or not. And if they are increasing that, how much money they have accumulated, right? This is the way through which the government borrows fund from the public. So we need to have and focus on this, right? So this is the data. So although we don't have that much data, but yes, at the starting of the US session, there will be a turbulence into the market, right? So we have to be either square off our positions before this data release and wait for this data to release. When the data has been released, the market have given its reaction, then we need to take the action accordingly. Now comes to the most bonus part of this session, that is the PDF which I've designed for the commitment of trade reports of data, right? So let me share you that PDF file, right? And I am very much confident that you can digest this information very easily, right? And after 2 3 times you'll have the access to this data, and this is a freely available data, but majority of traders don't know this data, right? This is the data every traders in the US, right? They have to submit their positions to the exchanges, and then exchange will, that is the CFTC, which is the regulatory body of the futures trading commissions, right? They release the data for public, right? So Tuesday they'll collect the data, and on Friday they'll release the data. And why they release after a few days? Because they need to calculate this data, right? And they don't want intraday traders, right, to manipulate the market by using this data. So this is one thing. Now this is the gold chart, okay, over here, and you can see that after a strong fall on Friday, we have seen that prices are gaining momentum for the upside, right? And right now they are heading upwards, although they have made the all-time the day highs, right? But still trading sideways. Now, in this scenario, what we need to do, right, to have the clarity. So retail traders mostly focus on indicators, and the professional traders or the hedge funds, they more focus towards the positions, that who are trapped into this position, who is uncomfortable, how many longs they have created, how many shorts they have created. Now comes our part. There are three kinds of report which has been published. The first is the option and future combined positions, right? So just for your knowledge sake, I am taken this report. You just need to have a focus on this report, which is the only future combined positions, only the futures data, right? Over here, we have the future and options together. Then here we have the long format report. This is a long format report. This is a short format report. So note it down. Every start of the week or on Sunday, you will have access to this data. Go to the CFTC website, download this thing. This is freely available, right? Till February 3. What is the market structures, right? What are the structure of the positions which the big players of the market have taken, it will tell you, right? Now, how to interpret this? This will come in the later part of this report. But let's try to understand this data. So here are four participants into this report. Number one is the producers, merchants, processors, users. That means companies which are involved in exploration, companies which are involved in mining, companies which are involved in processing raw gold into the finished products, jewelers and all, they come into this category. Okay. Then we have the swap dealers, right? Swap dealers provide their services to banks, institutions, exporters, importers, right? These are also banks, but they sell a product which manage the risk of this counterparties, which are the institutions, banks, and all, right? Bullion banks, I'm talking about. Here comes the managed money, the third category. Managed money means the hedge funds, big institutions, investment banks, right? What they are doing. And in other reportables, big players, right? Big individuals who trade with very big lots of big money, and even the retail traders also. Now, we have two categories over here, long and short. Long means the contracts which have taken towards the buy side. Short means the contracts which have taken towards the short side, right? And these are the future contracts, that what they think of future, right? So if I talk about producers and merchants, those who hold the inventories of gold, right? What they are doing. So if they have lot of inventories, they want to sell it on a higher price. And if there is a chances that prices might fall, because of this fear, what they will do, they'll create more or bigger sell side position, right, into futures market. So if prices fall, they'll earn profit from the futures market, so they'll have their average maintained to clear out their inventory. So this is one thing. Then the swap dealers, same long and short. Now let's understand the logic that what this data is telling us. So if I talk about producers and merchants, right, those who are the first party of the market, they are holding 32,000 contracts toward the long side and 59,000 contracts toward the sell side. Almost 1:2 of risk to reward ratio. That means toward the sell side, they are heavy, right? And why they are heavy? So they have taken buy, but all of a sudden prices fall, and because of that is they have increased their sell side leg, right? And if I see that what they have done, what kind of changes from previous data to this data have happened. So see, in the long side, they have only booked 142 contracts. But on a short side, whatever fall we have seen into the prices, who have booked the profit into it? 16,586 contract they have squared off, they have booked, right? And this is one of the reason, because margin also been increased by the CME, which is the Chicago Mercantile Exchange, right? And other bullion banks also, like Shanghai Metal Exchange we have, London Metal Exchange we have, right? They have increased their margin requirement, and because of this they have to short their short positions which are holding, and that is the reason we have seen a sudden fall into the prices. And right now, whatever upside movement we have done, so whenever you're doing any short selling, that means you're selling at a higher price. When the prices came down, you buy back and give it to the your broker from where you have taken the position, right? And this is called short covering, which is happening right now into the market, and that is the reason we have seen on Friday the prices have surged, and on Monday also they are heading upwards. It is not a starting of a trend, it is just a short covering. That means it's just a reaction to this action which happens, right? Second thing, now let's talk about the swap dealers. So swap dealers will just do the opposite of the managed money. If managed money is heavy on long side, they will be heavy on the short side, because they sell insurance to their long positions, right? So they sell insurance, take them as insurance sellers. So what they are doing, 36,000 contracts for the long side, 2,15,000 contracts toward the sell side. That means to whom they are selling their insurance, they are heavy towards the long side. That is the reason, to whatever insurance products they have sold, risk products they have sold to other parties, to cover their risk, they have to create a short side positions heavy. So who is right now uncomfortable if prices will go up? the swap dealers, right? Because if I do the ratio of 36, if I divide 2,15,000 by 36, I'll almost get 1 is to 6 or 6.5 something of ratio. That means one contract toward the buy side, six contract toward the sell side. Sell side is quite heavy. They are stuck, right? Now manage money will just the opposite of it, right? Or you can say swap dealers are just the opposite of the manage money, because manage money are their clients. So towards the long side they are holding 1,17,000 contracts, right? And towards the short side 23,000 contracts, right? Heavy towards the long side. Hedge funds are buying, so whatever price movement you have seen on Friday, who have taken the buy, who have pushed the price upwards, this data is telling us, right? Now, see, on the long side, they have booked 24,000 contracts, right? And that is the reason. Otherwise, it will be more than 1,35,000, right? They have booked the contracts toward the long side. And if I talk about the short side, they are increasing the short side positions. Manage Money is increasing their short side positions with 3,000 contracts. That means they are designing or they are structuring a fall into the prices. This is telling me, this data is telling me that whatever is the current trend, high probability prices will reject from resistance and there will be a sharp fall in the prices, right? Because the strong players of the market are controlling the sell side positions or the short positions, right? That means bears are in control. And to trap the buyers, what they do, they suddenly you'll find very strong candle toward the downside, but don't get into that trap, right? Their prices will come down and again they get reversed because they need to do their short covering. This data is telling us. Okay, over here we have the number of traders in each category. So I have done the calculations, right? Only majority 70% of the positions is being held by only four people. It's very huge. That means if that those four people book or dump their contracts into the market, prices will fall. Okay. We have to see other data also, but let's have a look, right? I hope this screen is visible, or should I make it more bigger? Okay, let me make it bigger. Now I think it is more visible. Okay. Now this here we have the long format report. Although you don't have to use this long format report, right? Because it is quite complicated. And this is important just to know this data, this information over here. How many traders, right? So it is telling me the open interest held by the uh, indicated number of largest traders, right? So towards the long side 17, short sides 34, 17 multiplied by 2, 1 is to 2 ratio, same, right? Then same over here for 8 or less traders, right? That means this big contracts are being held only by four traders, four or less traders, which I've told you, right? Over here by net positions, if I'm talking about, so 13, 32, here the ratios are not matching. 23, 46 ratios are matching, right? 13 multiplied by 2 is 26, and over here we have the short positions with 32, right? Short positions. That means that means four or less traders are holding a very huge short positions, right? This data is telling us. This is only the information. Otherwise, this data is almost same. So you don't have to use this data. The data which you have to use is the short report, and which is this report. And you'll find this report for all currency pairs also. If you trade into commodities like meat, orange juice, bushels, mustard, everything is been traded and you'll find this data. Cotton, sugar, cocoa, everything. Okay. Gold, silver, palladium, micro gold, everything, even the cryptos also. Okay. Now you have to focus on this data. We have seen, right? So for the swap dealers, 40,000 contracts, short size 2,23,000 contracts, right? It's almost 1 is to 5 or 1 is to 4 for the short side, right? For the managed money, 118,000 contracts towards the long side and 26,000 towards the short side. And right now they have increased their short side with 17,000 contracts. right? And they have booked their profit into their long contracts by 24,000 contracts. And when you book your buy contract, that means you are selling, and that is the reason prices have fallen, which we have seen, because this is the data till February 3, right? There is only one disadvantage, that will get this data quite old, right, of the last week. But then too, this data is very important. Very few people know this data. Those who know, they don't know how to use this data. But today, after this session, you will know how to use this data, right? So I've taken the current report, taken the help of the chat GPT, and design a stress index, right? So over here we have seen the gold futures, only most important for trading, right? So we have total open interest of 4 lakh contracts. Long side is 1 lakh 18,000, short side is 26,000, which we have discussed. What it is telling us: managed money equals to hedge funds, CTAs, trend followers, right? This group creates stress because they chase trends and panic together, right? Now, step number one. This is the part one which we have seen. Right now, the part two and the step number one. How to see the net positions. So whatever long positions you have seen, short positions, although they have done this calculations. And one time you have to design this in Excel. Every time on Sunday you have this data, put this figures into that Excel sheet, everything will be calculated, right? Or just message your relationship manager, will give you the Excel sheet of formula. You just have to put this data, and the final outcome will be of figures, right? So I've designed a percentile scale. On this percentile scale, if this is the figure which is coming, what you have to do, I've given this, right? So without wasting your time, I'll make it a short, right? Go through it. Those who want, just message me. I'll share this PDF file. It Go through it. It's very, very simple. A layman or a newbie can understand it, right? So this is the calculation. I have the long contracts, right? Short positions. Have I done the calculation? Positive side, 92,000 contract net long positions I am having. That means toward the buy side. What is the interpretation? This means hedge funds are heavily long on gold. Almost no one is left to buy. This is not bearish yet, but it is crowded, right? That means they get stuck into these positions. Think of it like a train already full of passengers. It can still move, but it's unstable. That means whatever buy side movement you're seeing in gold, anytime there will be a fall into the prices, right? And then sudden prices will change their course, right? This is going to happen. It is telling me that there is a lot of volatile movement, lot of turbulence will be there. So don't hold your intraday positions for a longer period of time. This is not the time to hold your positions for a longer period of time, whether in the gold or in the sell. Why I'm uh, putting too much emphasis on this? Because all retail traders have a common thing, right? Which is hope. Every time when I have positions, even I talk about myself, I have a hope that the UN session high probability price will come at my cost, then I'll get out of this position. No, it's better if you are having small loss, book it, get out of the market, right? Second thing, wait for the market to react. Right now is the market. News will not bring direction into the prices, right? You have to wait, let the market react, then you have to react, right? So if you find any strong candle, don't try to jump right into that candle. Let that candle close. Once that candle is closed, then after that, if prices are going downwards, take that position. If prices are going upwards, take that position. And I'll prove this on the live chart also today. Okay. Step two is the position extreme or normal. So raw numbers mean nothing alone. We compare them to history. This is the thing which you don't have. So note it down. Or those who want to take this. So I've taken 5 years of data of the commitment of trades, right? There are few websites which will give you the data. Otherwise, you have to manually maintain it. So extreme long positions historically, if I'm talking, the maximum side average goes to positive side of 80,000 contracts, right? To 1 lakh contracts, right? And if I talk about the short side position, so negative 50K to 70K, right? And the current value is positive 92K. That means If I talk about the bands, right? So it is on the higher band side, right? This is extremely long positioning, right? So position stress score is 38 out of 40, right? I've given this. I'll give you the concept also that how to give this point. You don't have to do anything. Just remember that I've given this number to the position, right? Only three things are required to do this stress testing, and you need to mark, and then you have to do the total. If that total is coming in percentile form 70 to 80, then what you need to do, I've given that scale, right? So don't think too much, just focus on this data and try to understand the concept which I'm telling you. Then the step number 3 is price respecting this position? That means if there is too much long positions and hedge funds are buying, the prices are going aggressively up. This is not the case. We have seen that prices went up today, right? Make a high, then again went back, then again try to move upwards. Almost equal highs they have made, and again they have fallen. So the data is telling us different thing, and the market behavior is telling us different thing. Both the things are not matching, right? This is the thing I'm talking about here. So this is the thing which you have to see. If managed money are heavy towards the long side contracts, right? And if prices are not respecting that, something fishy is going to happen. They're going to manage their position, and they will dump their buy positions, and there will be a sharp fall into the prices, which will happen or going to happen into this week, right? So if hedge funds are the bullish, is price accelerating strongly? No, in the current scenario, right? Weekly change in managed money. So on the long side, we have seen that they have booked 24,000 contracts. On the short side, they have increased. What it is telling us, funds are reducing longs, not adding, right? Despite bullish narrative, confidence is weakening. Confidence in which side? Towards the buy side. So buy side confidence is getting weaker, although they are increased our short side positions with 1700 contracts only, but they have booked a heavy position into long side, which is telling us that they are finding gold at a fair value price, and they are trying to book their profits right now. This is the data which is telling us, right? This is price disrespect, which we have seen, right? If I give you, if I want to give this score, so I'll give price stress score 30 out of 40. Why not 40? Because price is not collapsing yet, but it is falling to reward bullish positioning, right? So 30 out of 40. Just remember this scores, right? Then the step number 4, how long has this stress existed, right? So from recent week we have seen managed money has been heavily long for multiple weeks, right? I'm talking about the hedge funds. They are continuously bullish. Position reductions are starting now, right? This is late stage positioning. So this is a concept of the stress index. Any stress testing you do, so this is the late stage positioning. That means they are finding the prices at a very good level, and it is better if they don't want to hold the long side positions, they will book it, right? And on the other side, the margins are also rising. Second factor is this, right? So we are not in week 1 or 2, we are in the week 4 to 6 zone, right? So time stress score, time stress means because they are holding options and futures, and they have a time of expiry. That means time decay is there. So as soon as the time passes, time will work against their positions, right? So they need to book their positions, right? And that is the reason after 25th to 30 you'll see a very turbulence movement, and majority of time, if the market is going downward, upward pullback will come at this date. If the market is going upward, pull back toward the downside will come at this date, because this is the dates on which the futures expires, right? Or they create more future positions for the far contracts, right? So they have contracts for the next 9 months in US. So on time stress score, I've given 15 out of 20. How to give this score? Don't think I'll give you this data. Now, just do the total, add this thing, three things. I'm total score I'm getting 83 out of 100. Okay. What 83 out of 100 actually means, no confusions. It does not means that you must gold must fall or sell immediately, trend is over. It means that trend is fragile. The upward trend is fragile. Anytime there will be a strong downside movement. Breakouts are dangerous. On which side? Above. So if you find that whatever resistance charts have made, right, which we'll discuss after this on the charts, if you find a breakout, it will be a trap. Don't try to enter into that breakout candle. Wait for that breakout candle to close, right? Once it's closed, you'll find that prices will reverse back. That is the time you need to create your entry. That means reversal will be there. So this is structural warning, not a signal. Part 7. Now the most important part, what should an intraday gold trader do? So this is where theory becomes money management. It is telling me that if I trade gold with 0.20 lot, this is the time I should trade with 0.02 lots, right? That means I have to reduce my position sizing into this, right? When COT stress is greater than 80, stop buying breakouts blindly, stop holding intraday winners too long, book profit, get out of the market. Stop trusting news. News equals to direction. This logic is not going to work, right? Why? Because crowded trades fail violently. And who are the crowded trades? Hedge funds. Even the other reportables also have the same positions, right? What you should do instead practically. So I've given over here reaction, right? What spike, stall, reverse, expand volatility, high stress market. Right now is a situation of high stress market. So I'm not discussing this, right? Yes, and there is London fix, New York fix, and I am very much sure that majority of people don't know that what is London fix. So every day, two times a day, they set a price which is called the reference rate for gold. Suppose I am a ETF, I am a central bank, I am holding gold. Now I had to do my calculation of the reserve. What price should I take? I don't use this price because if I take this price and doing the calculation till the time prices will change. So I need a reference rate. Who decide this reference rate? Five banks. Where they have done this? London Bullion Market Association, right? So this is called the London fix. So in London fix, they have a auction for 5 minutes. According to London time, it is around 10:30, right? And then the second reference rate is 3 p.m. That means whatever trades, jewelers, whatever business will do, they'll take this reference rate till the next reference rate, right? That means tomorrow. So till the time, this is the data through which you can take the reference whether the market is overvalued or undervalued, right? If you find undervalued, which is very rare, without thinking anything, you can take a buy call because the reference rate is high, prices are trading at a very lower price. Prices will correct till its reference rate, right? So you can mark this London fix candle, draw the range high and low, and you'll be surprised to see that how the market is being respecting this. Same is the case. So there are two, three banks only involved, right? Two, three exchanges, which is one is the because over here we have the physical delivery of gold in London bullion market. Then the Shanghai Metal Exchange, right, which is called the Asian Fix. Then we have the New York Fix also. New York Fix is more for futures. They don't have any physical delivery. So I give too much emphasis on the London Fix. Okay. So focus on this. Then in the later part of this report, from here, I've given more things related to the stress index, right? So COT stress index equals to 83 by 100, right? So what they are telling us, right? So these are the observations which I've given, right? According to the current price chart, right? Trend is up, but the slope is forced. That means prices are trying to go upwards, but slightly they are tilting, right? That means the trend is changing towards the downside, right? So all these observations I have given. This is my observation number one according to current market symmetry. This is observation number one. This is my observation number two, which I've given, and this is the zone from where continuously prices are being rejected, which is 50-13, 50-40, right? Then, and what should happen in a low stress market? And this is not a low stress market, this is a high stress market, right? And what actually happening right now? Okay. So this is my observation number three. Wicks plus failed follow through is very important. So if you find first, you need to identify important support and resistance, which we'll do after this, right, on the chart. And if you find rejections, right, wig, shadow, whatever you call, right, it's an indication the reversal will be there, and today you're going to trade the reversal only, right? Upper wicks near the highs. Failed impulse candle. Impulse means very strong candle we have, but the next candle failed to go above the high of this candle. When means above the high, that means failed to give a close above the high of the previous candle after the breakout, right? So we find one candle which have given us a breakout, a strong candle. Next candle try to go up, but fail to give me a close above the high of the previous candle, which is the breakout candle. It's a sign of reversal. Instead of taking a buy, you should take a sell call. And same is the case, vice versa is the case for the sell side, right? RSI around, because RSI, MACD, both can be in a overbought area for a very longer period of time, which will not give you any clear direction. But this data will not lie, right? This is the exact data of the players of the market, right? Morgan Stanley, JP Morgan, Bank of China, right? Then Credit Suisse and Goldman Sachs. These are the, and Chase, right? JP Morgan and Chase. These are the five or six banks which sit in the Rothschild's room, which is one room where the gold price has been decided. Then we have the auction for 5 minutes. All the buyers and sellers will be matched. They will be matched till price will not reach equilibrium. Once the price reaches equilibrium within that 5 minutes of window, that is the reference rate, and only these banks are involved, right? So yes, they have the control of this market. We don't have that, right? So you have to respect this thing, right? Then I've given the observation number 4. So I'm not discussing this observations, right? Although I've given you the idea. Now we come to the next part, that is the technical charts, right? So why work best in high COT stress report? So I've given buy pullbacks. That means prices went down, fake breakout, then you can take a buy call. If prices went up, fake breakout towards the upside, take a sell call, right? Take profits faster than usual. So if you're targeting 10 points, instead of 10 points, take a target of 7 points. If you're targeting 20 points, take a exit at 17 points, right? Okay, don't wait for your target to hit. If you see any kind of weakness around your targets, get out of the market, book your profit. Okay, whether you are taking trades by your own or you are taking support from anywhere else like signal services, all, but don't wait for their targets. Get out of the market, book your profit before the target hit. Okay, and if you have taken any positions and 60% of your analysis went wrong, that means suppose you have taken buy call from 5,000 level and price, and you have a SL of 100 points, for example, and prices went down from your entry price by 60 points. That means 60% of your analysis already went wrong. Don't wait for your stop losses to hit, or don't wait with a hope that prices will turn. Instead, book loss, or you can hedge. Don't those of you who don't know hedge, in our upcoming webinar, we are going to discuss what are the hedging techniques which we have, which we can use in our intraday trading, how to decide the lot sizes or the risk sizes, and then how to design my hedging. So instead of booking the loss, we can get out of the market at a break even, right? So these are the things which just need to give us a message. We'll share you this, okay, and we'll share you the Excel report also. You just need to put this data, and rest everything will be calculated. So now let's come on to the next part of the report, which is the last section, which is our technical charts. Right now, I think you have access to my screen. Is it visible, guys? Yes. Okay. So this is the gold chart, right? In 30 minutes, let me make it H1. So here a impulse, then a downside, then again a. So I find two resistance over here, one over here, right? And the second one is today's high point, right? And prices are trading sideways. Now in the very next area, if you find a candle which give you like this, I'm not going to take a buy call because data is not telling me. I wait for the next candle. If that candle also successfully give me a close above it, then I take a buy call. If it is failed, I'll take a sell call. Breakout of this trend line, I'm going to trade today. So this is for the gold. Now let's have a look on the silver. Same is the case with silver, right? And if you want to draw a trend line, so I never take the climax low, I take the next low. So this low and this low, I'll connect this, and surprisingly market is being respected and trading at the same level, right? And chances of a downside price movement is quite high in gold also, in silver also. So don't think of taking a buy. High chances that prices will fall down, and very suddenly it will fall down. But what you need to do, yes, if you get confirmation, if prices break the low of this red candle, you can take a sell call. There will be a very strong candle. Don't try to jump into this candle. Wait for the prices. When this is done, this is also a fake breakout towards the downside scenario. Then again, take a buy call. Okay, prices are going to trade between this range. And for this, you can use the pivot points also. Draw your support and resistance that will be respected by the market. Or you can use the Fibonacci, right, of the whole movement. So this is the Fibonacci which I've taken, right, by connecting the low and high. Okay, prices already surpassed the 61.8 level, 75.5 or 78.6 levels also work very best, right? But yes, they are taking a U-turn from this, but high chances there will be a spike into the prices towards the upside. And lot of people will take buy call, but today, those who have attended this session, they are not going to take, don't take trade, visual analyze it, whatever I am telling, whatever the data is telling, whether the same kind of thing is happening or not into this market, right? Over here we have the order block also, right? This candle range will be the order block, and this low to this low is the fair value gap, and my data is also telling me the same thing. So I wait for the prices to go or give me a fake breakout above this uh, high, right? This high, a strong candle towards the upside, people will take buy call. Majority of retailers will take a buy call, and they put their stop losses over here. But I help the market big players, right, to hunt their stop losses, and I take a sell position from here, right, towards the downside. So this is my strategy. I'll keep my patience, wait for the prices to go up, then I'll take a trade. Now come to the US oil. So this is the falling wedge, falling broadening wedge, which we have seen, descending wedge, which have been broken. Prices went up, right? This is a daily time frame, right? This is the high, this is the low, and prices are trading within this range. Now, what I need to do as an intraday trader, first I need to draw the internal market structure, which I can identify, and majority of eyes, right, or brains can identify it. So see this high, lower high, this low, higher low. Okay. And this is a symmetrical triangle formations, right? And whenever you draw any kind of triangle, all these two verticals where they are meeting, this is called the apex of this area. This area will act as a strong support or resistance, right? So high probability prices will go up and again take the support from this area, right? So this is the area, right? Over here you can see the prices, right? Just give me a minute. So 63.94. So the probability on a daily basis toward the high side is quite high, right? Now let's have a look on a smaller time frame. Gap down we have, prices try to go up, but all candles fail to renew their previous high. Then towards the downside, although here the market structure or the order flow is quite impressive, but here it's not that impressive. So I'm not toward the sell side. It might be a trap. I wait for the prices to come down, take the liquidity below this area, right? This trend line which we have drawn according to the daily time frame, right, which is a symmetrical triangle. And when the prices again try to move upwards, I'll support prices to go upward, right? So I'll wait for the prices to come down, let the sellers be aggressive, let their biasness will be more overconfident by red candles toward the sell side. They will put their stop losses either at the high of the day or this apex point, pivotal point, right? Prices will take a U-turn. I'll support the market makers to hunt the stop losses toward the buy side. So this is the analysis for oil, right? This can happen today also. It might take because today is Monday. Monday will be quite less volatile as compared to other days. But yes, in the US session, we'll have volatility for sure. Now, let's discuss GBP USD or Euro USD, right? So we'll discuss both, right? So over here, I used indicator to know which session is active. So this is the Asian session and this is the start of the European session. Remember my London fix, right? You can visit Bank of England website to know that what reference rate they have decided. You'll find this, right? So probably the second candle after this will be that candle, right? Same is the case with gold, which you can use. You'll never find the reference rate price for free. For that you have to pay, but you know the exact timing that when they decide this thing, right? So it's very easy. I've given you the idea that what you need to do, right? So in the London session, this is the second candle, right, of the session. At this point of time, they decide their rates, right, which is called the London fix also. You, if you search on Google, you'll find a lot of details, right? So remember it, mark that area, you'll find prices will behave lot of things around that area, right? And from there, if you find any kind of very good rejection, that means, let me if you're using BMN capital, so the 15th candle, right, 15th candle, that is this candle will be the second reference price time, and this is the second candle which will give you the clear direction. In whichever direction prices go down, right, or in whichever direction goes, that will be direction till the next fix, right? See, this is the 15th candle over here, right, and this is the 16th candle, right? Prices went up and right now moving sideways within this range only, right? This range, this two lines, mark this two lines, right? This is the previous day's reference point, right? And still the prices are trading within this range. I need a very good, clear candle to give me a close outside this area. And after that, if prices continues in that direction, I'll take trade into that direction, right? This is the way you need to use it. Now, this is the Euro USD. Over here, I've drawn the symmetrical triangle. Prices is being supporting by the trend line which I've drawn, right? And right now they are getting a rejection. If this candle's almost 5 minutes 30 seconds are remaining, and if this candle closes in green, high probability prices take a correction, and then again it reverses back towards the upside, right? So to find a very good area to take a buy, I'll take only this green candles high and low, which is the green order flow for the upside, and I mark the Fibonacci areas, right? So I wait for the prices to at least come at 50 levels, and from here, if I find any kind of wicks, that means the rejection, I think of taking a buy call, right? Because the overall trend, the micro trend, it's toward the upside, so it's better if you should go with the trend, right? So I wait for the correction. Once the correction is done, I think of taking a buy call, right? And high probability prices might take a correction. If I see the RSI, right, so it's still holding grounds above the overbought area. That means whatever trend we are seeing, it's quite high, right? Now let's have a focus on this volume candles, right? Every day at the 13 and 14, right? That means just before the 3 p.m. according to the London timing, they have to fix their prices, right? Or you can search it on Google to find the exact timing, right? But you see every day at 13 to 15 is the highest volume activity. See, this is 13, 14, 15. This is 13. See, this is 14, 13, 14, 15. This is 13, 14, 15. And after that, a clear trend. See this 13, 14, 15. Okay, 13, 14, 15. So something happens at this price point. So it's better if you're taking any trade, book your trade before 13, watch 13, 14, 15 price action, right? Or develop your observation. After that, you can take a second trade. Now, the last two segments of the market. So we'll take the US 30 and the Bitcoin. So this is DEX. Beautiful movement on Friday. All of a sudden, prices have spiked, and we have the commitment of trade report data for this also. Now it's your homework to go onto the CFTC website and try to find this data. It's very easy, right? And try to develop your thesis that what that data is telling you. Now, very strong movement, small candles toward the downside. Probability of a correction is into the page. Yes, prices might take a correction, but it is a continuation pattern. Strong pole, then a flag kind of sideways movement. So yes, chances of a correction is there, but this correction is happening to give you a good buying call, right? Okay, yes, but if anybody is a very aggressive trader and want to trade, so right now, yes, you can take a short term sell trade, right? Till this red candle, this area. Okay, high chances that prices will come down, and to be very exact, 49930, right? This would be the area from where I think of take a buy call if I find a reversal. Till the time, if I am aggressive, I can take a sell call, right? And let me take it 0.10 lot in sell. Okay, so I've taken a short position. I keep my stop losses above the day high, right? And if the day high is broken, I've taken a very small lot. I just reverse my positions and take a heavy positions, or 0.20, 0.30 buy side. And this would be my target. Okay. So this is for the Wall Street 30. Now the Bitcoin. So prices went down. Let's have a more bigger picture. Then we discuss the microscopic view. Prices fall very badly. This is the area I'm waiting. Prices might test it again, right? Strong downfall into the prices, strong green candle and a sideways movement, which is an indication that today is not a good day. I might not find a very good trade into the Asian or into the London session right now. This is the trend line which have been broken. Prices taken a rejected and again went down. And this is the area which have been broken. Those who have attended our session, any candle which you find which have the high fractal and low fractal, that candle is very important. It is the full stop of a trend, and after this, new trend is going to start on a shorter period of time, right? Whatever time frame you're using. So this is the range which have been broken. If prices break the low of this candle, yes, it is telling me that yes, I can take a sell call, right? So what I can do, I can place a pending sell stop over here, right? Pending sell stop by 0.01, and the price, the low of this candle is 69357. So 69350, okay, would be my pending stop, right? And high probability that prices will take this low also, right? So almost 1000 to 2000 points of movement I'm going to get into crypto, Bitcoin, if prices break this low, right? And high probability in the very next candle, if prices break the low, they'll face lot of struggle to break this zone of this candle, right? So high probability prices might go down. Till the time I need a reference candle towards the downside, so I'll take this 2 point and draw my trend line towards the downside. Okay. I keep my stop losses above the high of this zone, right? And I'll take a 1:1 of trade. So that's all for my side. I hope you remember whatever we have discussed related to commitment of trade report. For this, I'm making more YouTube videos also in a very detailed manner, step by step. So do follow me. My mentor and Rag is my YouTube channel, right? You can find me on Instagram also. I make lot of reels, short reels, very informative reels. Go through it, and on a daily basis, I'll share my insights and everything on that. So anytime you have me with you over your phone, just go through it. And I'm making a lot of new series on fundamental data interpretation of the fundamental data, on technicals, smart money concepts, everything. So I hope you enjoyed today's sessions. So that's all for my side. I hope the value addition have been done for sure from my side, and you all guys have enjoyed the session. So once again, thank you uh, for attending my session and listening me to with lot of patience. So because we don't have a Q&A thing into this, right? But yes, if you're an existing client of Human Capital, I'm just a message away to have a one-on-one sessions on which you want to discuss anything. You can discuss it. So till the time, have a great start of the week. Have a great trading day ahead. This side Anurag signing off for today. Thank you.